Well, hello and welcome everyone. My name is Alexis Rogers and I'm the customer relationship lead here at RightCapital. And thank you guys for joining us on today's Friday webinar. Hope everyone had a great week so far and is looking forward to a nice weekend. And so today we're going to be discussing assessing risk in a financial plan. The goal of today's webinar is to just address all the various ways in RightCapital that you can really leverage the systems reporting functionality in having some powerful conversations and addressing some of the common pain points that clients might have, especially in today's environment when there's so much uncertainty. There's a lot of questions going around, and I'm sure that you guys have been asked similar questions by clients, such as what's it going to look like in 10 years? Am I at risk for inflation rising too quickly? Especially in the past couple of years, we've had inflation rise pretty fairly across all boards. So very much a timely topic in terms of assessing risk in a financial plan. Just to go over what we're going to be discussing today, we are going to be highlighting modeling various stress test scenarios and how you can really analyze those and have some key visuals for analyzing those stress test scenarios. We're also going to look at all the different potential risks that you can model within a financial plan, specifically looking at my pre-retiree case study. And we're also going to consider some of those assumptions that play a role in how you can really navigate different conversations about risk analysis in a financial plan and what you can do to kind of have a more educated or a more effective conversation when looking at risk analysis in a plan and RightCapital. And of course, as always, if you have any questions throughout the presentation, please feel free to navigate to the questions drop down and just input your questions there. I'll be more than happy to answer them. So this is really intended to be an interactive presentation. So any questions, like I said, throughout, please feel free to utilize that option that's available to you. Perfect. And just navigating into the RightCapital software here. Just to provide you some background, we're going to be working with the Schrute family plan today. They are currently in their mid 50s. They have a net worth of 1.4 million, including their primary home, and they do have a child as well. They're looking to retire in their later 60s, and they have some nice vacation goals planned. We're considering long-term care, and they also have some current living expenses of $5,000 or $6,000 per month. So these are all things that we're just considering in terms of the background information for the Schrutes. They have a lot of concerns. They are fairly concerned with inflation and also the potential conversation about Social Security and potentially not being able to rely on that. They wanted to see a financial plan considering some of those nuances being changed. And so diving into this, the first conversation that we want to have today is addressing one of the main calculation types in RightCapital. We're going to be focusing for the first part on the Monte Carlo simulations. That, just for preface, is going to look at those 1,000 trials of market volatility and those 1,000 trials of Monte Carlo simulations. So starting in the retirement module under analysis, here we can view what the probability of success looks like considering everything we've entered in the current plan. We also have a couple different proposed plans going on in terms of reallocating the portfolio, looking at that idea of potentially downsizing when they retire, and also retiring a little bit earlier for Angela as well. So that's just some of the baseline information. And currently we've got the current plan at 72% probability success. And with our proposed plan and our proposed path of those differences we just talked about, they've got an 86% probability of success. So that is simply just looking at everything that we've just considered and everything we were proposing for that proposed plan. And considering those 1,000 trials of market volatility, that is going to be the percentage of those trials that make it to the end of plan without running out of money. So with the current plan, we've got some slight risk in terms of market volatility exposure. And so that's when, that proposed scenario can really start to take effect and have a different proposed path and maybe try to expose them to less of that market volatility. But the main focus of what we're going to be looking at today is under retirement stress test. This is particularly powerful in terms of those conversations that we have when people are very concerned about specific stressors, particularly when we're looking at the idea of We see that inflation has greatly risen in the past 2 years. The Schrutes are extremely concerned by that. It's kind of a red flag for them. They really want to see what it would look like in a scenario and the impact of if inflation rose by an additional 3%, 4%. This stress test module here in these action items, we can start to apply different stressors upon their plan and see the impact of those. So the first thing that we're going to see here is that we can look at the baseline probability success, which is going to be looking at that probability success we just saw in analysis, that's 72%. Right now, we are toggled to the current plan, so we're going to be focusing on the current plan right now. But you do have the option to choose any of the other proposals if you wanted to see what those stressors look like for those plans. But let's focus on the current plan right now, so we're going to keep that selected, keeping in mind that the baseline is 72% considering everything we have entered. And let's use these action items to start to apply some changes. So they're really concerned about inflation. So let's model this slider going up by 4%. This is going to increase inflation across the board by an additional 4%. What that means is that if my general inflation is at 3%, it's now going to be 7%. And if healthcare is 5%, it's going to be 9%. So let's hit refresh. And you're going to see that impact on the probability success for the inflation stressor probability of success. As we can see, if inflation rose across the board by 4%, it's going to be an 8% probability of success. And we can also model different sort of stressors. So if they're concerned about Social Security as well, they're concerned, there's a conversation going on about potentially the trust funds for Social Security being depleted in the future, things along those lines, or they just want to know if they're secure, even if they don't get as much guaranteed income as they are looking for from Social Security. We can use this action item slider for Social Security will be reduced by to model the scenario of them having Social Security reduced by 50%. And what that means is that their current Social Security, instead of them receiving that $3,000 per month that they would have received, they would receive $1,500 per month, just as an example. And so we can see that if we reduce Social Security by 50%, their probability of success would be 62%. Other things that we can apply in these stressors is we can also look at the scenario of if the equity market dropped immediately by your specified percentage. We can also look at the idea of if asset returns were lowered by a specific percentage, maybe 2%. We can also analyze what it would look like if taxes increased by a certain percentage. So let's say they increased by 40%. And you can also analyze what it would look like if somebody in the co-client were to live an additional period of time, maybe 5 years. So that conversation of if we lived an additional, 10 years, 5 years, 3 years, how would that impact our plan? And also looking at if healthcare costs were higher by a specific percentage. These are all different specific stressors that you can apply and see how it impacts that individual stressor's probability of success. And so you can hover over each of these to see, if taxes were increased by 40%, the probability of success, if we apply that stressor to the current plan, is 57%. If we scroll further down in the action items and we hit this edit button, there are additional things that we can add for stressors. One thing that we can add here is if we wanted to include a combined stress test, we can select that from this list and hit save. And the same thing is true if you were using this screen to present within RightCapital, but you didn't want to address certain conversations. So if you didn't want to look at longevity, you could exclude it from this stress test analysis by deselecting it. But we're going to leave that selected and hit save. And what the combined stress test does is when we include it, we'll see a combined option populate over here. This will combine everything that we are applying for stressors. So it will look at the equity market dropping immediately by 40%. It'll have Social Security reduced by 50%. Inflation will be higher by 4%, and so on and so forth. So all of these are going to be considered in that combined stress test. And it's a place where you can have that conversation of if in the worst possible case scenario, if every possible thing went wrong, what does our probability of success look like? you can see right now if that happened, if that were true, 0% for the current plan. And so maybe we want to, have a conversation about how we can protect ourselves from maybe Social Security being reduced, maybe some potential income sources, things like that. But this is once again combining all of these stressors happening at once. So it's going to be the absolute worst case scenario. Aside from looking at the current plan, we can also look at different proposals. So we can also see what it would look like upon the proposed plan. And as we saw previously, the proposed plan, it has a baseline of 85%, 86%. And so you can see that difference, they have slightly higher probability successes for majority of these. They also are at risk if everything here that's listed happened. The combined probability success is 0. Let's lower some of these and see what it would look like. Let's hit refresh. And so this is a great place to have that conversation, to quickly toggle and see that impact of, if Social Security was reduced by 30% and if inflation was increased by 2%, what does that look like? This is a quick toggle on, toggle off, and can be applied across different scenarios, as you can see. So this is a great place to have a very effective conversation to address some of those key concerns. But there are additional things that you can look at to apply different stressors within a plan. And so if we go back into the retirement analysis section, and so if you were trying to analyze something in specific to show that probability success and maybe what it would look like in the cash flows, things like that, if we go down to the action items, this is where we can go to start to, further tailor our proposed scenario. And so if we were trying to highlight potentially the impact of long-term care, using these action items, we can start to propose additional things. So what does it look like if long-term care occurs for longer than 2 years? We can enter what it looks like if they're in long-term care for 5 years. And we can also look at other sorts of proposals too. So let's hit the refresh button and see that impact. But this is just one of the things that you can analyze here. And then you would see that impact upon their probability of success as well. This is going to be similar to that stress test, but this is different in that this is truly applying it and incorporate it into the proposed plan as a part of that proposed path. One of the other things to consider is that when we do apply something like this to the proposed plan, and you're trying to run that sort of analysis, there are other reports available that we can look at to kind of run that analysis of how risky their plan is. So some of the assumptions that we can also look at if we go into the gear icon setting section, and if we go into other assumptions, this is where we can go to navigate to control assumptions for the specific client. So anything we're doing here, we're proposing or creating a change just for this individual client. It's not going to impact our other clients. There are other assumptions that we can incorporate if the client is extremely concerned and we wanted to, say, increase inflation for this particular client. We can set that assumption back in the gear icon account section, or gear icon settings, other assumptions section. We can apply customized assumptions here. So if we wanted to set that assumption that they want to run with a higher inflation than what we have for our global level assumption, we can indicate that here and model those differences. So let's say they wanted to see inflation for healthcare costs increase by 2% and general inflation increase by 4% or by 1%. We can apply that change here. Alongside this inflation assumption adjustment, we can also apply an assumption that we're going to be reducing Social Security. So that idea of if they are extremely concerned about Social Security, which they are, and they don't want to run with the assumption that Social Security is guaranteed 100% of that, say, $3,000 per month that they would have been receiving, we do have the option under the Social Security field where it says adjust benefits starting in the future. Right now we've got it toggled to no adjustment, but we can set this to reduce by and indicate that we want to run with the assumption that Social Security is going to be guaranteed for, say, 60%. So we want Social Security to be reduced by 40%. And that will reduce whatever we input for their Social Security benefit back in profile income by 40%. So this is just one of those ways that if it is a true concern and we want to run with those assumptions, we want to set that as the standard for their actual plan, we can do so in the gear icon setting section here. And so once we enter that information, another key thing that we want to consider under the gear icon setting section, but under methodology, if we scroll down on this page, we can also choose to include a display of scenario-specific cash flows. This is going to be another way and another calculation that you can look at in terms of running an analysis on the risk for their financial plan. So in this section, if we check this off, which we do have it selected, what this means is when we go back into the retirement module, we're going to see the impact of increasing inflation in that way upon their plans. So we need to do some work to get them back up to a higher probability of success if we wanted to keep this. But if we go into the retirement cash flows, this is a different sort of calculation. This is going to be the second half of our report or analysis on the risk of their plan. So when we're looking at the cash flows or things tied to the cash flows, this is going to look at a straight line projection. So it's going to be a guaranteed return. That does not naturally include volatility into this calculation. So it's an entirely different calculation than the Monte Carlo simulations we were just looking at and those specific stress tests and probability of success. Another way to gauge their financial well-being is in the cash flows. Let's look at the summary. And here you can see that year by year breakdown of their inflows and their outflows. This is another useful tool to kind of effectively gauge what their plan is going to look like in the future. But as I said, naturally, this is not going to include any variations in asset allocation. So it's going to assume that if they're getting a 6% return, they're getting 6% return each year. If we're following the baseline path or the same allocation for all years for cash flows. What we just did back in the gear icon settings section is we activated the ability to specify that we want to look at a different return scenario in these cash flows. So under cash flow summary, we see the option here for baseline. If we click on this drop down, you now have the option to indicate different return scenarios, such as bad decade followed by slow growth, looking at a Fed adverse scenario followed by modest growth, and a strong growth scenario, and also worst case scenario, flat 0% return. If we click on any of these, you will see the impact here to their cash flow calculations. So we can see there's already things that have changed, slight numbers here. But this is going to be even more relevant if we go into the accounts tab. This is where you can see a year by year breakdown of their account growth as well. And so you can see these differences by toggling between all of these different return scenarios. And this is one of the ways that you can see what it would look like in the cash flows on this deeper, more granular look into their inflows, outflows, and their accounts, how different return scenarios would impact their assets, and potentially, if that conversation of if they're extremely worried about a 0% return scenario, you can show them here where there are going to be gaps and potentially where we would want to start to invest in potentially some guarantees and sort of income to ensure that we have enough assets to fund this sort of scenario, or at least address that kind of concern when we're looking at the cash flow calculation type. And so that's just one of the ways that you can analyze on the cash flow front that sort of risk analysis. Alongside looking at the summary or the accounts tab, I want to note that you can also go into the invested asset tab, and you can also see the specific portfolio return each year from this particular sub-tab of the cash flows. If you really wanted to analyze what the account growth looks like, you can see the impact of any sort of return scenario that you toggle to upon the portfolio return. Yep, so a lot of really great content there in terms of running an analysis on that sort of calculation. If we go back into retirement analysis, as we can see with everything that we ran with in terms of our assumptions, it's greatly brought down our probability of success. And so that's maybe when we want to start looking at different analysis and different items to cover that sort of shortfalls. But let's go back into the gear icon settings section. Other assumptions. Let's set healthcare costs back to 5% and global assumptions back to 3%. For them, their main concern is Social Security, so we're going to leave that toggled on and run with the assumption that Social Security is going to be reduced by that 40%. And so, of course, you can see those impacts. What we're doing over there back in the gear icon settings section is we're impacting what we're running with in terms of those baseline assumptions across the board, and we're changing those assumptions for this particular client plan. There are, of course, other analysis that you can run in terms of looking at the impacts of risk analysis depending upon the client's concerns. Here in the action items, this is where you can start to build out that proposal of, do we need to start to have some insurance in terms of funding our goals and our expenses throughout our lifetime? What do we need to do to ensure that we are maybe saving more, providing a little bit more of a cushion? What does it look like if we start to reduce living expenses and maybe save more? So that's just some of the analysis that we can run here for this particular plan. And on top of looking at those specific analyses, if we go into the dashboard section, and if we look at the snapshot feature here, this dashboard snapshot is a really great place to pull information across RightCapital and put it into a one-page sort of report, or to have a lot of big conversations directly from this particular page. So it's a really effective place to have a lot of conversations. And if a client is concerned, if we wanted to analyze some of those stressors in a plan and we wanted to incorporate it in this particular report, in the dashboard snapshot, one of the great things here is that this is fully customizable. So as you can see, I'm already incorporating my probability of success. I'm already looking at some of their savings analysis for the current year. And I'm including their balance sheet, their retirement income stability ratio, their net worth, and their effective federal tax rate. But if we click on the Add Items dropdown, and if we go to Retirement, we can include the stress tests into this presentation of the snapshot. And we can also drag and drop to make this more visible throughout a presentation with a client. So if we wanted to bring this further up, let's say we wanted to address this directly almost at the top here. And so we can incorporate that into this visualization. A good thing about the snapshot feature is we can also add these notes. Very often I'll see this utilized to kind of address an agenda for a client meeting, or just a take home of what you reviewed at a meeting, or things that you want to just consider with the client. And so let's say we wanted to review stress test and look at our proposed plans and how they differ and how they provide them more security when considering these stress tests. So this is a way you can further incorporate this into your normal narrative of when you're presenting in RightCapital. This snapshot feature can be a very useful place to have a lot of decent conversations, a lot of effective conversations, and it pulls a lot of those key visuals into this specific reporting visual. Another key aspect of utilizing the snapshot is if we are addressing, where they currently stand today in their balance sheet, we're addressing that they only have 20% of stable income in retirement, and we also wanted to look at the stress test. If we click on this arrow next to the widget, this will bring us directly to where this information is coming from within RightCapital. It'll take us to the retirement stress test, and you can start to play around with things here even further and have a deeper conversation. So you can really have an effective conversation. We can have that high-level overview of information within RightCapital via the snapshot, and you can even launch into each of these widgets to have a deeper dive discussion, especially on the stress tests and running those different analyses. So very effective in terms of tying all this information together into one space, especially when you're trying to report something as stressful as a stress test to clients. This can be a way to kind of ease that narrative, ease that conversation, and just have some strong visuals here, and just make it more of a personable approach as well, especially when we have this nice notes or agenda piece here. One of the key aspects in RightCapital, when we are looking at running reports or having conversations with clients, whether it's in RightCapital or using RightCapital reports, one of the key things we want to consider is you can download a PDF deliverable of a plan by navigating into the three dots in the right-hand corner and into report. Here we can start to really curate what you want to include in the conversation in the PDF report, specifically focusing on looking at the stress test and that analysis of the different scenarios of risk. So in the report section for this specific analysis, we can include the snapshot feature here. We can include the analysis section here if we wanted to include that first section specifically. One of the great things with the analysis section in particular is that there's going to be an underlined feature here. Anytime you see something underlined, if you click into it, it'll open up a menu and you can click to include or exclude and really control what is included in this particular report. So for example, for this particular report, this PDF, I don't want to highlight necessarily everything that's included in analysis. I want to highlight just the probability tab. I want to include the action items. I'm going to include this current year savings, savings over time, savings rate, and savings details. So the saving analysis is good. Let's look at retirement details. We can consider income sources and maybe where we might have some room for potential income. And let's keep the withdrawal rate. One of the other great aspects of this particular screen is you can also include multiple scenarios in this particular analysis. So if we click on this toggle to select plans, we can include every single one of my proposed scenarios. As you can see, I've got quite a few. So if I wanted to include them all in this report, I can do so by clicking them all, which I do for this particular client. So let's hit done. And the same is true for cash flows. So let's click on the cash flows header and let's really fine tune this so that way, as we know, cash flows can have a lot of information packed into it. And it might not be necessarily want to address in this conversation when we're just trying to focus on the Shroot's concern about those specific stressors and the risks that we were just running. So here we want to include the waterfall because I do want to highlight what their current year cash flow looks like. We're going to include the full summary page. And we want to include the ending balance by accounts just to see that growth over time. And then let's hit done. This way we can, maximize what we address and make it a little bit more of an efficient conversation for cash flows. And of course, we want to highlight the stress test feature as well, because that's where we applied most of our stressors and ran those specific analysis. And the same can be true. We also want to include liquidity in case we wanted to talk about their liquidity analysis. And let's also include the blueprint, just that way we have that snapshot of what their current plan, their current assets look like and where they currently stand today. And then let's hit the download selected pages. And so that's what you can include in that report if you're trying to focus specifically on those aspects that we were discussing. And especially when you are either using RightCapital and you're presenting within RightCapital, a PDF report can always serve as a take home or just kind of a reminder of what you talked about in your presentation. But if you aren't using RightCapital to present directly from, that's a great sort of report to run in order to address all those key concerns. Another great aspect of RightCapital, if we go back into the advisor portal, we look for the Shroot Family Plan. We have something that's called the client presentation mode that you can utilize to really fine-tune your narrative in RightCapital when you're trying to address the client's concerns and try to present within RightCapital. So selecting the client from the list, if we navigate to the Planning Access tab here in Planning Access, this is where you can start to select the narrative that you want to share with the client. So in Planning Access, let's select the snapshot. Let's look at the analysis. Let's make sure that it's including that probability tab, the comparison, savings, retirement details. Let's hit done. And the same thing for cash flows. Let's click into that header. It's going to be a similar approach to back in the PDF report section where we were curating that, where you can select what you want to include. Stress test, and then blueprint. Let's hit save. And so now if we wanted to enter that client presentation mode, from this open client dropdown, we'll see this downwards arrow. If we click on this, we can select open in client access mode. And what this does is it'll launch whatever we just had selected in planning access. And this will be our flow for the presentation. So if you're presenting in RightCapital, you can use that to address, this is what the snapshot looks like. As you can see, it's going to be a more focused conversation on running those different analysis. It's not going to cover all the modules of RightCapital, which for right now, when we're covering something that's already so complex, it might be nice to have it a little bit more fine-tuned to just addressing those specific concerns. We can see the stress tests, the cash flows are going to be different. It's not going to be including as much information as it was before. The same thing with profile blueprint. It's just going to be a little bit more of a focused narrative. One of the key things with this particular presentation mode too is if you were discussing anything or reaching out to our fantastic support team via the chat bubble, as you can see, there's no longer a chat feature in the bottom right-hand corner. That's because when you're in this particular presentation mode, it's going to be disabled during this time. So you're not going to see any sort of responses from them. If they answer any of your questions that you might have been asking, you wouldn't see it while you're in this mode. So this is going to be an uninterrupted presentation within RightCapital. So this is just one of the strong ways to present within RightCapital, to kind of share your screen, to have a more focused conversation about a client's particular concerns, especially about those stressors, and just be a little bit more nuanced when presenting. One of the other analysis within RightCapital, alongside our normal analyses throughout the system, is under the dashboard section, under liquidity. This is a great place to look to kind of have that snapshot of, are we prepared for any sort of emergencies that happen? As you can see, I kind of mentioned it throughout the reports and things like that. This is going to be a different sort of analysis than what we were talking about earlier with the Monte Carlo simulations and the cash flow projections. This is going to look at what their current liquid assets are, and it's going to take their expenses, and you're going to see here a liquidity analysis that looks at what their actual liquidity is, so assets that they hold in the bank, assets that are in cash, things like that. And you can see that total actual true liquidity. And we can see what their target liquidity is. So as you can see, they're over, and we'll see this, how much they're over in the surplus/deficit chart right here. One of the key things with this sort of analysis is in the action items, you can control what you are incorporating in both their liquidity and also as their target liquidity as well. So with their target liquidity, this is going to look at their expenses. If you wanted to look at a deeper dive of what makes up that specific number, if we go to details here, we can view here what their current monthly expenses are. So this is going to indicate what is considered in that target liquidity. So we're going to be incorporating those current living expenses, their housing costs, if they had any sort of healthcare insurance premiums, anything like that, you'd see it listed here. And then we can see here what is making up their current liquidity. So it's going to be made up by their checking bank account and also the cash that they have in their brokerage account specifically. Going down into the action items here, this is where you can see what the current monthly expenses total looks like, so that $9,500. And you can also propose an expense buffer. So especially when we are having that conversation already about applying different stressors or applying different analysis, this is where you can go to see, how much do we need to have on hand if we really wanted to make sure we're funding the current monthly expenses, but maybe some additional buffers as well. So let's say we wanted to also insure an additional $1,500 just in case. So if the worst case scenario happens and we need that cash on hand, totaling out to $11,000. Let's hit refresh. And so you can see that total covered expense. And you can even change what your liquidity target is. So if you wanted to run that analysis of the target liquidity for 3 months, you can keep it toggled as is. But we can also use a slider to analyze what it would be needed in terms of a target liquidity for, say, 9 months of expenses. Let's hit refresh. And as you can see, with their actual liquidity, they still have a little bit of a surplus, but not a lot. So they could use the cash on hand to fund what their necessary current expenses are in the worst case scenario. Another great functionality of this particular liquidity analysis is if we click on the edit button, we can also choose what we incorporate as part of their actual liquidity. So in the screen, you can choose to include their bank accounts as part of their actual liquidity. You can choose to include the cash that they have in their taxable investment accounts. And you can also choose to include their life insurance cash value if so desired. And so you could also remove these things as well. So if you didn't want to include the cash and taxable account, we wanted to just highlight the bank accounts, we can deselect it and hit save. And you're going to see that impact. As you can see, when we do so, we have a deficit now if we're trying to cover 9 months of their expenses. So this is another great place to run a different sort of analysis. In the worst case scenario, how much money do we have on hand to ensure that we are funding those necessary expenses?